Hey everyone, welcome back to Corporate Decoder. We're about to dive into Marpai Inc.'s latest report, and let's just say it involves some behind-the-scenes board decisions and a bit of preference for preferred stock that might just make you rethink what a company's future could look like. Stick around to decode what this all really means. So what we're looking at today is a report filed by Marpai Incorporated, a company that sounds pretty important. They're giving us a peek into their recent goings-on, specifically their annual meeting back in August 2025. Normally these meetings are all about electing the people who steer the ship, the directors, and Marpai definitely had some directors up for a vote. We see names like Damien Lamandola, Yaron Aitan, Sagav Shiv, Colleen DePlaudio, Jennifer Calabrese, and Robert Pons. The numbers show that overwhelmingly these folks got the green light from the shareholders to continue their roles. For example, Damien Lamandola received over 10 million votes for his position, with only a tiny fraction voting against. The same story repeats for all the other directors. This means the current leadership at Marpai has the backing of the shareholders, at least based on this meeting. It's interesting to note the brokey non-votes. That's when shares are held by a broker on behalf of a client, but the broker didn't receive instructions on how to vote. For most director votes, there were over 4 million broker non-votes. While it doesn't change the outcome here, it does show a segment of ownership that wasn't directly participating in these decisions. But the directors weren't the only thing on the ballot. Marpai also sought shareholder approval for something called Proposal No. 2. Essentially, they wanted to confirm their choice of UIL as their auditor for the upcoming fiscal year. Think of auditors as the financial detectives who ensure the company's financial reports are accurate and fair. Shareholders gave their stamp of approval to UIL with a massive majority, with over 12 million for votes. This is crucial because having a trusted auditor builds confidence in the company's financial health. Now here's where things get a bit more strategic and frankly a lot more interesting. Proposal number 3 was about changing the company's foundational legal document called the Certificate of Incorporation. They wanted to make room for a new type of stock, preferred stock, and not just any preferred stock, but what they call blank check preferred stock. What does blank check mean? It means the board of directors gets to decide all the critical details later. They can decide how many shares of this preferred stock there will be, what rights they have, how they rank compared to other stock, and what special privileges they get. This gives the board a lot of flexibility. Imagine getting a gift card with no specific store assigned. You can decide where you want to spend it. That's kind of like blank check preferred stock for the board. They can tailor it for specific future needs. Whether that's raising money in a particular way, making an acquisition, or offering special incentives. The vote on this was pretty solid, with over 10.8 million votes in favour. This shows shareholders trust the board to make these important decisions later. It's a vote of confidence in management's ability to adapt and use financial tools effectively as opportunities arise. The report is signed off by Damien Lamandola, who is identified as the Chief Executive Officer. This tells us the CEO is personally attesting to the accuracy of this filing. So what's the bigger picture here? Marpai held its annual meeting and got clear endorsements for its directors and its choice of auditor. The most significant move, however, is the strategic flexibility they've gained by allowing for blank check preferred stock. This suggests Marpai is positioning itself for potential future capital raises or strategic maneuvers where having flexible stock options will be beneficial. It shows a forward-thinking approach, allowing them to react to market changes without needing immediate shareholder approval for every detailed decision about new stock classes. It's a move that gives management a powerful tool in their toolkit. Now let's look at the broader context. Marpai Inc. is indeed in the insurance technology space. They focus on using artificial intelligence to help businesses, particularly those in the wholesale insurance brokerage and carrier markets. In essence, they're trying to make insurance smarter and more efficient by leveraging technology. Think of them as trying to modernize an industry that has historically been quite traditional. This flexibility with preferred stock could be a key enabler for growth, perhaps for research and development, expanding their AI capabilities, or even making strategic acquisitions to bolster their technology offerings. However, this also brings its own set of considerations. While flexibility is good, the lack of predefined terms for this preferred stock means future investors or stakeholders might want to pay very close attention to how and when the board deploys these shares and what specific rights and preferences are attached. Decisions made by the board regarding this stock could significantly impact the value and voting power of existing common stock. In terms of strengths, Marpai is operating in a sector with significant demand for innovation. AI in insurance has the potential to streamline processes, reduce costs, and and improve underwriting accuracy. The strong shareholder support for the current board suggests a level of confidence in their strategic vision. The ratification of their auditor also points to a commitment to financial transparency. On the other hand, a notable risk inherent in any tech-focused company is the rapid pace of technological change. Marpai will need to continuously innovate to stay ahead. Furthermore, the insurance industry, while large, is also competitive and regulated. Successfully navigating these complexities will be crucial. The move to create blank check preferred stock, while a strength in terms of flexibility, could also be a point of scrutiny for investors if not communicated and utilized transparently. Overall, Marpai is taking steps to equip itself for future growth and potential strategic plays. The shareholder votes indicate a unified front for their current leadership and operational choices. The really interesting part is the creation of that flexible blank check preferred stock, which signals an ambition to adapt and act decisively in the evolving market. It will be captivating to watch how they utilize this new financial instrument in the coming years. Alright, that's our decode of Marpai Inc.'s latest filing. What's your take on their strategic move with preferred stock and their leadership's direction? Let us know your thoughts in the comments below. If you found this breakdown valuable, please give this video a thumbs up and subscribe for more deep dives into the decisions shaping our corporate world. And don't forget to join our Discord community, linked in the description, to continue the conversation. Thanks for watching, and we'll see you in the next decode.